What if I told you the Forex market, the largest financial market in the world, might not be what it seems? Imagine for a second that it's all a gigantic simulation. Crazy, right? But stay with me. We're talking trillions of dollars changing hands daily, currencies fluctuating constantly. But what drives these movements? Is it pure chaos, or is there something else at play, something we can't quite see? Think about it. The market often behaves in predictable patterns, trends repeat, and history seems to echo. Is it possible that these patterns aren't random at all, but rather evidence of a pre-programmed design? A design so intricate, so vast, that it's almost impossible to grasp its true nature. Now, I'm not saying we're living in the Matrix, but what if the line between reality and simulation in the financial world is blurrier than we think? What if the Forex market, with its dizzying complexity, is actually a giant experiment, a game being played at a level we're just beginning to understand? Let's talk fractals. Ever notice how a small snowflake mirrors the pattern of a much larger one? That's a fractal. A pattern that repeats itself at different scales. Now, here's where it gets interesting. Some believe that the Forex market exhibits fractal behavior. The same patterns that appear on a 1-minute chart might also show up on a daily or even yearly chart. Think of it like this. What if these repeating patterns are the market's DNA, a hidden code that governs its every move? If true, it would mean that market movements aren't random at all, but rather expressions of this underlying fractal geometry. This is where the simulation theory starts to get really interesting. If the market is a simulation, then fractals could be the programming language, the building blocks of this artificial ecosystem. And if we can crack the code, who knows what we might find? Now let's add another layer to this. Imagine a world where the Forex market is dominated by AI trading bots, algorithms programmed to buy and sell at lightning speed. These bots can analyze massive amounts of data, identify patterns we can't even perceive, and execute trades in fractions of a second. Some argue that these bots are already calling the shots, manipulating the market with their hyper-efficient trading strategies. They say the human element is fading, replaced by a cold, calculating intelligence that operates beyond our control. Is it possible that these bots, with their ability to learn and adapt, are contributing to the simulation-like nature of the market? Are they creating the very patterns we perceive as evidence of a designed system, or worse, are they being controlled by an even more sophisticated intelligence, one that's using the Forex market for its own mysterious purposes? Here's the kicker. As technology advances, we're entering the realm of hyper-algorithmic markets. These markets operate at speeds and with a precision that seems almost supernatural. Trades happen in nanoseconds, driven by algorithms so complex they make the human brain look like an abacus. It's in these hyper-algorithmic markets that the question of simulation becomes truly unsettling. When the line between human intention and algorithmic execution becomes indistinguishable, it's easy to feel like we're just pawns in a game we don't understand. So, is the Forex market a simulation? Are we witnessing the emergence of a new kind of financial reality, one where humans are no longer in control? The answer, my friends, is out there, but be careful. The deeper you dig, the more you might find that the rabbit hole goes further than you ever imagined.